We have made it to the final trading week of 2025. What a year it's been. We've had some amazing opportunities, but the question on everyone's lips, are we getting a Santa Claus rally? And I'm sorry to burst your bubble, but I don't believe so. In this video, I'm going to walk you through exactly what I see on the charts, why I don't think we're in for a Santa Claus rally, and I also want to show you that we actually haven't had this Santa Claus rally for the last number of years. Then we're going to dive into silver, because what on earth is happening with silver lately? It is crazy. And then we're going to take a look at your favorite tech stocks coming in to the last week of the year, into the final week of the new year. So let's dive right on into it. First thing I want to look at here is our chart on the Qs. Now, what I see is this descending parallel channel. In and of itself, neither bullish nor bearish. It is literally just indecision and sideways movement. However, we need momentum to break through it. And at the moment in the market, I don't see that we have that momentum. You can see that we made the high on this day here. Where were we? Wednesday, the 29th of October, and we have literally just been bouncing through this channel since. Yes, we've made a higher low. However, we failed to make a higher high. And right now, with only retail investors in the market, I actually feel like we're going to drift down a little bit before we get that breakout. Now, where do I see us landing? I'm anticipating that we're probably going to revisit this 50 moving average, which is around about 615. If we hold that and the institutions come back in during the new year, then I think we're in a great position to break out of this channel. But without the institutions being with us over the next week, I think that we're just going to, at best, drift sideways. Now, the Santa Claus rally. Whenever you hear something on YouTube, people talking about the fact that, we go up during the week of Christmas and New Year, you've got to ask yourself, is it actually true? And go back and look at the data. Let me take you back to the Christmas New Year of 2024-25. And it's this period of time here, Friday the 27th of December, or let's call it Thursday the 26th, the day after Christmas. As you can see, where did we go that week? List to me looks kind of down. What about the year before, you ask? Well, let's go have a look. 23-24. December. Oh my gosh, here we are. All the way up here. Wednesday, the 27th of December, Tuesday, the 26th. We drifted sideways, and ultimately, come January the 2nd, we dropped down. Let's, just for fun, go back another year. November, December. Here we are. December the 27th. Where did we go? Sideways. So I don't know where Santa Claus is for you guys in these markets, but I don't see him in these charts. And that's exactly why last week I actually exited a lot of my positions, because I don't see that we get this breakout with momentum to carry us higher. I see that we're going to drift down a little bit. So that's the Qs. Let's take a look at silver, because what a ride has silver had this year. Even if you were the biggest silver bull coming into this year, I don't think anyone could have predicted that we would end up here. Now, is this the time to buy? Absolutely not. For me, I'm looking at exiting silver this coming week. I feel like we're probably going to drift a little bit higher, but then we are absolutely in for a blow off top. I've no doubt about that. And I want to take you back, it might take a while to get there, to the year of 2010, because I see that we are really starting to get a very, very similar pattern in the market. And if you were holding bags of silver at the end of 2010, after it had its huge run up that looks very similar to what we're experiencing right now, you'd only just be getting out in profit now, 15 years later. So here we are, nearly. Here we go. Does this look very similar to what we're seeing right now? To me, absolutely. We kind of went a bit sideways, we had some upwards momentum, a bit sideways, and then we had this massive parabolic run. Now, where are we in this cycle? Who knows? We could be sort of here with all of this left to go. Although we could, which I sort of think is most likely, be around about here, which means that I'm looking for these topping patterns. What am I looking for? Essentially a loss of momentum. I'm looking for the doji style candles. I'm looking for inability to hold the highs. And then I'm out. Because what happens to silver then? Let me just make this chart larger so you can see it all. The highs of 2011, you didn't even break even. If you were buying and FOMOing in, you didn't break even until last month. You held those bags for, 14 years, almost 15 years. I don't want to be caught in that. I would much rather lose a little bit of upward gain than be stuck holding bags for 15 years. Is this definitely going to happen? Of course not. We can't see in the future. However, I absolutely know that in my journey of trading, I have never once been sad taking profits. I absolutely have been sad when I've been left holding bags, but never once has taking profits, especially on a gain like this, left me questioning things. So let's move into our favorite stocks for the week and see where we might be heading. First up, Google. Now, I still love Google, even at these levels. Am I trading it right now? No. I closed positions on Google. However, if we're looking right here, these two candles, we are fighting hard to stay above this 20-day moving average. If we do, and we get some good upward momentum, then I see that we're in for reaching these sort of new highs around the sort of 327, 328, potentially up to 330 level. If we lose this moving average, then I see that we're heading back down here. So this week will bear all. I'm not entering positions now. Where a lot of options traders go wrong is they see this level. They go, we've had a red day. Enter your puts on a red day. And they'll sell a put maybe at the next support level, which would probably be around this $300 level, or maybe they'll go down to the next moving average. But I find that you always get the best entries once you have confirmation. So even if we confirm higher, great. I would rather get in knowing that I then have that momentum on my side. Let's take a look at AMD. Now, AMD, for those of you who think moving averages aren't real, stocks don't follow them, take a look at AMD. What do you see here? We were rejected at this 50 moving average constantly. And then when we had the convergence of the 50 and the 20, then we were rejected by the 20. So absolutely moving averages play a role in your trading. Now, where are we at here? Same as Google. We are fighting for dear life to stay above this 20 moving average. For a stock like AMD, and what we've just seen over the last, over a month now, is that this is an important line to hold. So what I'm waiting for is the same as on Google. I'm waiting for that confirmation. Do I think we're going to get it? I actually don't. And this is why the stochastic RSI is way high and we're starting to get a bearish cross. So what I think we're going to do is lose this 20 and potentially find support back down around these levels here, around sort of that $200 level. So I'm eyeing AMD for a $200 level. What do I want to do? I want to make sure it finds support there. I want to make sure that we start trending upwards on our stochastic RSI before I enter the position. So I'm not selling a $200 put here with the expectation that it would be a good level to own the stock. I'm waiting until we get there, and then I'm making my entry. Palantir. Now, Palantir has been very interesting. Palantir also tends to like its moving averages. We like the 50, 50, 50. So again, we've had the cross of the stochastic RSI. We actually had a very bearish candle here. We opened and closed at the low of the day. So I'm expecting that we're coming at least back down to this 50 moving average. I'm waiting. I'm not placing my order yet. I'm not entering a position at sort of the 180 yet. I want to get all of the downward momentum out of the way. A lot of the problems that options traders have is that they try to catch a falling knife. Let's wait for the knife to bounce before we enter. Amazon. Same thing. Amazon's been stuck in this range for pretty much all of the year, you know, ever since, even before it's sort of the end of last year. We've gone nowhere. We reached a high in July of 24 at around sort of that 186, and right now we're at 196. So we've gone nowhere. Do I think Amazon is in for a big move in 2026? Yes. Do I think it's coming this week? No. And for much the same reasons. We are trapped in this range. We can't get past the 50 moving average for long enough to get a substantial move. Once we do break that, and we break it on volume, which again needs the institutions to give us that volume, then I think we go higher. For now though, we're kind of running out of momentum. I think that we drift back down to sort of this call it 185, 190 mark. And again, once we get to that mark, then I'm looking for my entry. What about Nvidia? Now, Nvidia actually had a great week last week. Yes, there was news that came out about the acquisition of Grok, but we had a beautiful bounce off of the 150 MA, which led into that. So what I often say is, yes, news can help the stock, but if the stock is going that way anyway, the news, the catalyst, whatever's coming is coming. Do you know what I mean? It just so happened that, yes, the news came and it, helped us over this 50 moving average, so we didn't drift back down, but we were getting that bounce anyway. So Nvidia for this week, again, the stochastics high, we are potentially getting that bearish crossover, so I'm waiting for the pullback. Potentially we find support at this 50 moving average, but most likely we're probably going to retest around this 173. Again, we've been stuck in this range for the last 6 months since July, just sort of bouncing between that sort of 170 up to 190, give or take. So I am absolutely a buyer if we get back down to the 170 mark. Even if we get to sort of this area here around sort of 180, I would be very interested in placing my orders then. Not now, then. All right, the last few. Let's take a look at Robinhood. Where are we, Robinhood? Hood. There we come. Okay. Robinhood's been quite disappointing over the last, couple of months, especially since it really did have some great earnings. The market just hasn't adapted to that yet. So again, we are not looking strong right now. The stochastic, when I see the stochastic turn bearish before we even get to the top of the range, to me, that's an indication of weakness. So yes, we absolutely did see a substantial red day on Friday. We were down 1.2, nearly 1.92, nearly 2%. I know a lot of people were selling puts at this sort of support level of the 150 moving average. However, all of this to me indicates we're probably going to actually touch this. So I would rather get to the support and then place my orders. It makes things far safer for you. It ensures that you're not catching the falling knife. You know, we've seen it time and time again. We've seen these red days only to come down even further. Now, if we get to this moving average, I do believe we will find support, but I want to get the confirmation first. So Hood is not yet on my radar, but that's what I'm waiting for. And then our last stock of the day, Sofi. Again, what do we see? We've been in this sideways pattern, okay? Am I interested in Sofi right now? Again, no. And look at these moving averages. We are just consistently getting rejected from its 20. And right above, we've got the 20 and the 50 sitting practically right on top of each other. Are we likely to break through that without institutions? No, we're just not. What's most likely? Again, we drift back down. We've got the stochastic not looking that strong. And you can see here, you know, we sort of had the turn back here, call it the 5th of December, the 8th of December, and we just didn't regain that strength. We've been stuck under this 20-day moving average. So I like Sofi around these sort of, call it 25 levels, 25, 30. And I don't think it's unrealistic that we see these levels again. So that is my watch list for the week. That's where I think we're heading. Could I be wrong? Of course. And of course, you know, when you're playing, well, not playing the bearish side, I actually want to put that out there. I'm not playing these bearish moves because we still are technically in a bull market. You know, most of these stocks are near their all-time highs. So people calling this a bear market and playing for the bear market, I think are going to get wrecked because I do see that we're going to have the upward momentum. I just don't see that it's this week. We need the confirmation of the move before we play the move. It's these sideways choppy markets that get a bit tricky to play in because we don't have a determined direction. We're just drifting sideways. So let's wait for the drift down. Let's wait for the confirmation and then let's place our entries. So I hope you all have a wonderful week trading. If you want to learn more about my strategies, how I make sure that I always wait for the confirmation, how I get the best entries, how I do my technical analysis, there's a link in the description for my mentorship, officially kicking off on January the 5th. And if you want more information on it, check out the link. I would love to have you join.